Nifty IT is the top sectoral gainer after consulting bellwether. Accenture issues bullish guidance for FY25. Coforge and Infosys along with Wipro lead gains.
Pratap Snacks surges as autumn investments in Madhukela I buying nearly 47% stake from PE investors at 864 rupees a share. They also issue an open offer for the additional 26% stake at 864 rupees a share.
Sugar stocks surge as Food Minister Prahlad Joshi says the government is considering an increase in sugar, MSP and ethanol prices. Sugar exports for the 2024-2025 season are also being reviewed.
Edelweiss Financial and Nuvama Wealth, both of them are higher in trade as 6% equity changes hands in a block deal at around 626 rupees a share. Edel Finance as well as eCap Equities are the likely sellers.
Railtel rallies as it wins a near 150 crore order coming in from the Rural Development Department in Maharashtra. Stock higher by about 1%.
Hello and welcome to Chartbusters. I'm Nigel, with me is Mangalam. We kickstart a new series, and as we speak, the Nifty is up close to around 50 points. The rolls were on the long side on the Nifty. The Nifty Bank has seen some short covering, and that's where the open interest out there is a little bit lighter in comparison to a month or so ago. But Mangalam, things are looking good. I guess the Nifty appears that it's on its way to around the 26,600 odd mark. At least that's what the technical indicators are telling us. The Nifty Bank, though, it started off on the back foot, but that's the driver from here on.
Let's see where it goes from here on itself. You know, the IT pack doing extremely well. The next 1 month will have a bunch of triggers that we will watch out for as well. Right from the previews of the first quarter results, along with a lot of political developments, we'll be watching out for the outcome of a couple of state elections. And you can't rule out any global, related activity as well. So there are a lot of cues in the October series. We're sitting with gains of nearly 3,700 points in the 4 series that preceded this one. So let's see where things go from now. A strong bull run or momentum continues so far. Let's welcome Manas Jaiswal for a quick technical check on the market. Manas, the market continues to surprise on the upside. What's your call on the momentum right now? And would it be prudent to take fresh longs or maybe buy on a bit of dips?
Good morning, Mangalam. So if you can keep the stop loss, strictly follow the stop loss, and definitely even at current levels, you can take a long position. And I think I'm confident because Nifty has given a black pattern breakout yesterday. The target of that breakout comes near 26,650. So even from current levels, you can see almost 400 points rally on Nifty. I would like to recommend a buy on Nifty at current levels. Keep the stop loss below 26,100. The first target comes near 26,475, and the final target comes near 26,650. So I'm still bullish on Nifty. However, on Bank Nifty, we have seen some profit booking on higher levels. But again, if you're talking about the trend, I think even in Bank Nifty, one can create a long position positionally, keep your stop loss below 53,700. And here the target would be around 55,200. I think it will take another 3 to 4 trading sessions to reach 55,300 on Bank Nifty.
All right. Got it, Manas. What about individual stocks?
Good morning, Nigel. So I think Polycab one can definitely look at because stock has given a fresh breakout. The stock was facing resistance near 68.50. But since stock has given a fresh breakout here, one can create long position. Stop loss should be around 6,900. Target would be around 7,350, 7,350. And second is a buy call on Bata because we have seen buying interest at lower levels in last 15-20 trading sessions in Bata. Today, stock has given a breakout, price breakout, and stock has broken the 50-day moving average also. So here one can play for a bounce back. Stop loss should be around 14.29 and target would be around 1,500.
All right, take that point, Manas. Thanks a lot for that. Just before we move on, keep an eye out on Titan. Titan stocks moved to the high point of trade. Jewelry stocks have been doing well all of last month, but Titan in particular will be in focus because one is the start of the new series. Secondly, in the first week of the new month itself, or new quarter itself, we get the Titan preview. So maybe, the street is eyeing some sort of improvement in sentiment in the second quarter and thereafter building up to the festive season. So management commentary out here will be extremely crucial, especially given the rise that we've seen in gold prices and the kind of activity that we've seen in all other jewelry stocks as well. Titan starting the series fairly well. Let's shift focus to our special segment where we get you a few ideas for profit coming in from our colleagues at Money Control Pro. Today we have Madhu Chandade joining in.
We are talking about Federal Bank that has underperformed both the Nifty and the Bank Nifty in the past couple of months. Interestingly, the underperformance comes despite a very strong Q1 performance by the bank, marked by a very healthy growth in deposits as well as robust growth in advances. The bank did an excellent job in a tough environment to grow deposits and gain market share. This was the key reason for the growth in credit as well, without any deterioration in the credit to deposit ratio. The net interest margin of the bank, however, declines sequentially, but given that the share of the high-yielding products is very low, we are hopeful of an improvement in the coming days. The bank has an excellent track record with respect to asset quality. The new CEO is therefore inheriting a bank in a good shape, but he has his task cut out to improve the ROA from the current level of 1.3%. Federal Bank's exposure to capital market is limited, and under the new CEO, a more holistic offering across the gamut of financial assets is expected. We see value in the stock.
Thanks a lot for that, Madhu. For the time being, though, we'll slip into a short break. Up next, we get you excerpts from an exclusive interview with Tata Sons Chairman, Mr. N. Chandra, as they look to set up a semiconductor fabrication unit with Taiwan's TSMC. You don't want to miss this.
Welcome back. A bunch of stocks surging as we speak. We have Polycab, which has moved higher, was the call of Manas as well. We have Balrampur Chini is the other one which has moved higher. Again, the top F&O gainer. And Tata Power is the other one which too is spiking. We'll tell you all about these stocks in just a bit, but let's get you an exclusive conversation with the Tata Sons chairman N. Chandra as they look to set up a semiconductor or fabrication unit with Taiwan's TSMC. Our colleague spoke with him.
See, the semiconductor is going to be fundamental for the future because everything is going to be technology driven, data driven. We talk about AI driven, and we will talk about more new terms as we go into the future. But fundamentally, semiconductors power everything. Whether you talk about auto industry, whether you talk about power industry, consumer electronics industry, industrial IoT, medical industry, precision medicine, drones, aerospace. I mean, you can think of any industry from agriculture to very advanced new tech industries. Everything is going to be driven by semiconductors. And so it is fundamental for a country like India to have the capability, because once we have the capability, we will be able to custom design our products, our services, and come out with a lot of innovation. Right. And India has attempted to get into this field for multiple decades, but this has not happened. And currently, Tata Electronics, which was started during COVID in the last 4 years, has set up a huge electronics manufacturing facility and also packaging facility and also assembly and test facilities. But the icing in the cake is the foundry. And this is a very, very important step in India's semiconductor journey. We will produce logic chips, 5 different technologies, technical nodes, and this whole thing has been made possible because of the strong support and partnership we have received from PSMC and Frank. Because worldwide, every company wants to get into this, but it requires know-how, it requires capital, it requires talent, it requires a lot of execution, discipline, and a lot of investment in human resources, and also the ability to build a partner ecosystem, because there are a huge number of companies which all feed into the foundry. So what this will do is to not only establish a very modern, high-end fab in Dholera, but it will bring a large number of smaller companies, but technically important companies, which will feed into this ecosystem. And this whole deal has been going on, and obviously this could not have been done without a bold vision of our Honorable Prime Minister, who has led this from the front, and the government has been very proactive in working with the industry and giving confidence to people like PSMC.
All right, so interesting conversation out there, but let's focus on a stock that has been surging in trade. Nuvama Wealth is in focus after nearly 6.2% equity changes hands in the block deal window, about 629 rupees a share. We understand that it's Edel Finance and ARM ECAP Equities who are the likely sellers. To get that confirmed, we're now joined by Rashesh Shah, the chairman of Edelweiss Group himself, to discuss the details around this deal itself. Thanks a lot, Rashesh, for joining in. We also have Nimesh with us, but just one confirmation. The block deal that happened today, who were the participants on that? How much do you sell? And what do you do with that money?
No, as you know, we earlier this was called Edelweiss Wealth Management, which got renamed to Nuvama, and we spun off the business, which was a very unusual deal. But we spun off the business, got it listed. But when we did that, we kept about 14% of the company with Edelweiss for our own needs, because Edelweiss also has investment need. We have some borrowings. So this, whatever the 14% was held, approximately half of that, at least actually slightly under half of that, is what we have sold today. Morning. This stock, Nuvama, got listed a year ago. So we had a 1-year lock-in on the shares, so that got over. And as you know, we in Edelweiss are making investments in our asset management and insurance businesses. But along with that, we also committed to reducing debt. So we are also paying the debt at the holdco level. So this inflow will also help us reduce our debt.
All right, Rashesh, thanks a lot for joining in. Just give us some further clarity. Edelweiss has raised close to around 1,400 crores. How much of it will be used for debt repayment? How much of it will be used to expand the business? And also, what's the call on the remaining stake? What do you want to do with it?
So we are obviously very bullish on the financialization of household saving opportunity in India, asset management, wealth management. We had always said banks and NBFCs were doing well, housing finance companies were doing well. But I think asset management companies, wealth management, what we call asset-light strategies will do well. So we are pretty bullish on the opportunity for this entire wealth management space, also for Nuvama. So we're happy to hold it. We have enough liquidity for our investment needs. So a large part of this, what we liquidated, will go towards repayment of debt. We want to be asset light. We want to be low debt. So over the last 4-5 years, as we had a little bit of that, we've been reducing it. Our overall group debt come down significantly from a peak of close to 50,000. We are now down to 14,000. So we have 75% of the group debt in the last 4 years. So we continue on the journey. This amount that has been raised, 1,400 odd crores.
Okay. Rashesh, hi. Good to see you after a long time. Thanks for joining in. You nicely explained as to how this money is going to use the first tranche that you've sold in Nuvama for repaying debt. I know there is a lockup of 75 days to sell further for Edelweiss. Would you be in a hurry to sell the remaining stake, or you want to hold on because Nuvama itself is expected to do well? So my first question is on that. And second, I believe there is a further plan of monetizing your other businesses as well. So first, on the Nuvama remaining stake, what do you plan to do, and how long you want to hold on? And then I'll ask you about the alternatives business as well.
So I think it's a good question. I think our idea was to sell it to good investors. So as you know, the names of the investors come out, you will see that these are very high quality, long only names and all. So that was very important to us. We didn't want to, try and sell it to, maybe a lot of hedge funds and others, the more high frequency investors. So we were very, very particular that we are in no hurry to exit. So I think Nuvama, we are very bullish on the wealth management space, as I said, asset management space. So though we have a 75-day lockup, we are not in any hurry to exit the balance. We will just do it as per that. As you know, Edelweiss as a holding company, as an investment company, we have our own priorities. Our whole core debt was about 8,000 crore. So this reduces it significantly, and we have a lot of other levers. We have quite a few other investments.
Sure.
Our idea is to bring the whole core debt to half, from 8,000 to 4,000, and that is why we have other businesses like mutual fund and alternative asset management, which also we can convert to cash by partial stake sales.
Got that, Rashesh. Now, the other question was on the Edelweiss alternatives. I believe that's the next company where you guys will look to unlock value. What is the kind of stake sale you're looking to dilute by an IPO in Edelweiss alternatives? And what's the kind of valuation you're looking for? Because it'll have a significant impact on Edelweiss as well. I believe the market is anticipating a value of close to 9 to 10,000 crores. Can you just confirm the same?
It's very hard to confirm because we are still in the process. We have not finalized anything. I think by end of October, we would have finalized, and as and when it's finalized, we'll be very happy to come and give the details.
How much you look to sell? How much you look to sell in the IPO?
So our current plan is to sell 10 to 20%, which is what we have announced, 10 to 20% stake in that particular business. We said we'll raise between 1,000 crore to 2,000 crore and again, as I said, part of a large part of that will go again towards reduction of debt. So I think with the Nuvama stake sale, with the EAAA IPO stakes, where we are now, and that will give us a lot of comfort. That will give a lot of comfort to our stakeholders. Though we have managed our debt very well, as I said, 75% reduction has already happened. We just want to make sure we continue on this path, and we have very good business. As you realize, we had 8 businesses, one out Nuvama, which has done very well as standalone. The remaining 7 businesses, including alt asset management, mutual fund, housing finance, both the insurance businesses, all of them have a lot of future out there. They all, have been growing very well. So we just want to make sure that while we sell some stake, or that we get some liquidity to repay debt, we also ensure these businesses are on a robust growth path.
Got it. Rashesh, we are flashing the details of Edelweiss Financial as well as to what you own in the other businesses like AMC, the 2 insurance businesses, as well as the ARC business. What on the ARC, Rashesh, because that's been a pain point as far as Edelweiss is concerned. There are some regulatory, concerns as well. RBI has, taken some firm action against the ARC business. How soon that can get resolved, and what's the ultimate plan as far as the ARC business is concerned? Will you look to sell that business in future?
So I wouldn't say ARC is a pain point. It's been a good business for us, like every other. What happens, Nimesh, a lot of these are very cyclical, especially ARC is a highly cyclical business. 13, 14, 15, until 2020, there was a lot of NPAs in the banking sector. We helped recover. We have totally recovered more than 40,000 crores for banks in the ARC business. Obviously, we have earned a fee and an incentive and good return on the capital on that also. But we have also recovered more than 40,000 crores for the banks. We still have about 35,000 crores of AUM. So though we are not acquiring a lot of assets, we continue to recover. And even the RBI order was on acquiring new assets, which anyway, there is not a lot of NPS to acquire out there. So ARC is a 5 to 8 year cycle because it is obviously a business that will have a lot of growth opportunities when there is an NPA buildup in the banking sector. Fortunately, right now, NPAs in banks are low. So we are recovering the old asset we had acquired. We have about, as I said, 35,000 crores of AUM. We are recovering about 9,000 crores every year, if you see that. So we are hands full for the next 3-4 years, focusing on the recovery part of it. On the new asset acquisition, I do think not just us, the entire ARC industry is about 2 to 3 years away. So in a way, the RBI order also has asked us to strengthen our processes and systems and all. And as you know, any business, there is always opportunity. So we are taking this opportunity, working closely with RBI to make sure all the areas that RBI has raised concern, we are strengthening ourselves, and we will make sure that RBI is satisfied with whatever progress that we have to make.
Got that, Rashesh. Before I let you go, Rashesh, while you spoke about value unlocking in the other businesses, I also understand you're in the process of incubating few businesses. Broadly, if you can tell us which are the few areas that you're looking at and what sort of growth prospects you see for the couple of businesses that you're looking to incubate in future.
So we always look at opportunity, but currently our commitment is, and I can unequivocally state that until we bring down the debt, I mean, because, even incubating businesses might need small investments, 40, 50 crores, 100 crores, and that has been where Edelweiss has been very good at. Small amount of capital, a lot of effort. We are effort heavy capital, but not capital heavy kind of a company. So we want to make sure that once we bring down the debt to half of where we are now at the holdco level, which we, as I said, we expect to hopefully do that in the next 2 to 3 quarters, is where we start incubating new businesses. We're seeing a lot of opportunities in AI, in financial services, in customer contact center for customer experience, all of that. But we will not do anything until we complete this phase. If you know Edelweiss, I think until last year, we have focused on the NBFC and the wholesale asset. We had some stress out there. Once we completed that and got that under control, we said we'll now start working on holdco debt, bring it down to half. That once we do that, then we start, working on incubating new businesses and growing in those areas again.
Briefly spoke about the growth potential in the housing finance business itself. The buzzword of the last 1 month was the big housing finance IPO that came in from the house of Bajaj Finance, and also thereafter there were steps that HDFC took to go ahead and unlock value out there. So just wanted your thoughts on the value unlocking potential of your housing finance business. Where do you see growth out here, and do you have an AUM target here?
We don't have an AUM target. In fact, in all our businesses, we always say quality before growth. So we have no growth targets. In fact, any of the CEOs of a business, you speak to them, they will say that we are a very unusual company, that we really don't have any growth targets at all. We have a lot of quality targets internally that we force them to meet. So I think housing finance is a phenomenal opportunity, especially affordable housing, where our housing finance company is. Model of co-lending with banks, partnering with banks. I think there'll be two kinds of housing finance companies that compete with banks, and there are other housing finance companies which will partner with banks. Our model in our housing finance company is going to be to partner with banks, to work closely with banks. So it takes a little bit of more time early on to get the partnership going, to get the linkages going. But I think they both are very good opportunities. You can compete with a bank and build a balance sheet, or you can partner with a bank and come up with win-win opportunities and product in that. That's the one we are following. And as we start scaling that up, we will obviously be happy to come and speak more about that.
Value unlocking when? Next year, the year after that?
Yeah, in about a year. I think housing finance is about to expand.
All right.
I think affordable housing, as you know, the upper end housing has been growing fast. Affordable housing, actual housing growth has been more muted. Underway, and affordable housing finance, I think the next 4 to 5 years, the opportunity looks very, very exciting.
All right, Rashesh have told us what Edelweiss will do with the money that they'll raise from this Nuvama sale that you spoke about. But what about in your personal capacity? You as well have trimmed stake by close to 0.5% in the last few quarters. You hold still close to around 4% stake in the company. What's your plan with the stake you have?
So I think our idea is we are extremely bullish. I mean, as you know, Nuvama was Edelweiss Wealth Management. In fact, if you go back 18 years ago, that was Edelweiss, the capital markets business. On the opportunity, it's a great management team. I have highest degree of confidence in that. And our idea would be to continue to be, invested. We have all sold a little bit because we all make other investments and all that. Instead of that, we have no desire to, exit in a hurry or any need to exit in a hurry. We are investors. We are believers of the opportunity, and we will, like as you saw, even Edelweiss today. I mean, when we did the block today, we had announced it at a 5% discount to the closing price, but we ended up closing it at 1% discount. If we had gone at 5% discount, we would have sold a much larger amount of number of shares, but we decided that instead of 5%, we will stick to 1% and only get very quality investors. So we are very, very particular. And as I think all of us strongly believe in the asset management.
You did allude to quality investors, Rashesh. Could you give us a sense of who were the other side of the trade? We know that you've sold. Quality investors, if you could give us a few names.
Give us a sneak
I
peek,
think,
Rashesh.
I think they will come in the next half an hour or so. I myself, in fact, I was in a meeting and I came onto this interview immediately after that. But in the coming half an hour, I think all the names will be reported.
So let me give a hint.
Right,
Because the
Nimesh will
deal
give us a
happened in
hint.
the block window, has to be institutional investors.
Yes.
I understand a couple of large FIs have bought in today's block, and some domestic mutual funds could also be there. So it's a very strong book, as Rashesh pointed out. Because they did in the block window, the demand was strong. They didn't want any leakage. So, and of course, the block window is only for institutions, right? So it's largely to the larger FIs and some domestic mutual funds.
Rashesh, Nimesh, as always, is on top of it. He's given us a sneak peek. In the next 30 minutes, we'll have the official names.
Rashesh was in the meeting. Nimesh was, dialing all those guys and said, oh, who are the ones who bought?
Okay. Yeah. All right, Rashesh, before we let you go, we are following the fitness mantra, as you always tell us. Life is about the marathon, building businesses as well as like a marathon. But tell us your view on capital allocation as of now. The markets are red hot. What's your view right now? A lot of investors will be looking for advice. Asset allocation, how much to equities, real estate and gold, any other asset classes? Well, your quick take.
Yeah, I personally think things like gold and real estate are more emotional kind of assets, depending on people's comfort. But I think the larger opportunity is equity versus debt. I do think that the bond market, debt, government securities, as RBI starts cutting rates, will also be a great opportunity. Equities obviously have done phenomenally well. So I would currently recommend about 50 to 60 equity and about 40 to 50 good to play the interest rate reduction cycle. I think the next year there is going to be a come down and there'll be a fair amount of yield as well as capital gains in the bonds also that will be available.
Right. 50 to 60% equity and 40 to 50% debt. That's quite a shift from higher proportion towards equity. Understandable given the sort of run that we've seen in the markets as well. Always a pleasure speaking with you, Rashesh, on a whole host of things. Edelweiss Fitness, Edelweiss 2.0, so to say, and the markets itself. Thank you so much for joining in.
Thank you.
We leave
Thank
you with
you.
the promise of you joining us later as well.
Sure. Thank you, all of you. Bye.
All right. With that, we'll wrap up on this edition of Chartbusters from Nigel, me and Nimesh as well for joining us and taking us through with that conversation. Thank you so much for watching. Trading Hour comes up next.